Last week ended on a positive note after Joe Biden dispelled fears about the possibility of a new lockdown because of the Omicron variant. Apart from that, traders welcomed initial jobless claims data. The figure remains below the pre-pandemic level, which fuels optimism among speculators. Wall Street investors left for the Christmas break, which boosted the quotes of the main US stock indices. Demand for risky assets crept back to forex, which was bearish for the US currency. So the US dollar, which measures the strength of the greenback against a basket of 6 main rivals, saw the worst trading week since August. Risky assets won favor with investors following statements of drug manufacturers about the high effectiveness of even antiviral drugs against Omicron. The only currency that weakened against the US dollar last week was the yen. The dollar versus yen pair consolidated above the level of 114. Traders were selling the yen even despite strong macroeconomic reports. Japan's government approved a record budget of $940 billion to facilitate economic recovery. Additionally, Japan's central bank chief said that a cheap yen could adversely affect the economy, hinting at the possibility of an intervention. At the same time, the euro-dollar pair bounced off from a 17-month low, rising above the 1.13 level amid risk appetite. However, bears continue to exert pressure on the pair. Investors fear a slowdown in the Eurozone economy. Despite the optimism in the US about the Omicron strain, some EU countries, like the Netherlands, resumed lockdown restrictions. The UK Minister of State for Health also admits the possibility of a lockdown. Nevertheless, the pound sterling grew by 1.2% at the end of the last week, consolidating near the level of 1.34. This is the highest level in the last 5 weeks. Demand for the pound sterling is buoyant thanks to the unexpected hike in the interest rate by the Bank of England. Apart from that, the latest macroeconomic data showed that the UK economy recovered from the pandemic faster than previously expected. Moreover, the government decided not to tighten quarantine restrictions before the Christmas holidays. Cryptocurrencies, especially Bitcoin, resumed a rally amid risk appetite. Bitcoin climbed above the psychologically important level of $50,000. By the end of the last week, the quotes consolidated near this level. Investors shrugged off fears about a new severe wave of the pandemic. As a result, demand for commodities as well as oil rose again. Oil prices ended last week at $77 per barrel. Signs of a surge in demand also facilitated the growth of oil prices. Apparently, traders factored in the fact that crude inventories in the US declined more than expected, while gas prices in Europe and Asia jumped sharply. It fuels expectations that some industries may switch from gas to oil. As for supply, the number of active oil and gas drilling rigs in the US advanced to the highest level since April 2020. It may signal an increase in production in the coming months. Brent crude gained more than 3% over the week. Gold managed to hold at the level of $1,800 per troy ounce despite risk appetite. Will gold be able to retain its bullish trend? We will definitely tell you about that in our next video reviews. Subscribe to our channel and be aware of changes in trading sentiment on the markets. Together with us, see you back soon.